To get started, I would recommend that you get a completely free Gold IRA guide that is written by the best and most trusted Gold IRA company that I have found after over 20 years as an expert independent gold researcher. This free Gold IRA guide will explain everything you need to know and will also answer any questions you may have about Gold IRAs. This is the best guide I have seen in my lifetime as an expert independent gold researcher with more than 20 years of experience. And this is the best guide available anywhere, in my opinion. Also, when you get this free Gold IRA guide, you will get free access to the top Gold IRA experts who will provide you with personalized support and help over the phone, and they will answer any questions you may have. To get this top free Gold IRA guide, simply go to the link that is in the episode show notes or go to the link that is in the episode description. So again, to get this top free Gold IRA guide, simply go to the link that is in the episode show notes or go to the link that is in the episode description. This free guide is really worth getting. Simply go to the link that is in the episode show notes or go to the link that is in the episode description. Also, this audiobook is not financial, investment, or tax advice. For financial, investment, or tax advice, consult a financial, investment, or tax advisor and take full responsibility for any decision you make. Okay, let's start the audiobook. Investing in retirement, Gold IRA versus bonds, mutual funds, ETFs, fortify your future with the timeless allure of gold. The journey to a secure and comfortable retirement is often described as a marathon, not a sprint. It demands careful planning, consistent effort, and most importantly, strategic investment choices that can weather economic storms and stand the test of time. For decades, the traditional retirement planning narrative has revolved around a core portfolio of stocks, bonds, mutual funds, and exchange-traded funds, ETFs. While these assets undoubtedly hold a place in many portfolios, increasingly discerning investors are seeking diversification beyond these mainstream options, exploring avenues that offer both stability and the potential for long-term growth. Among these alternatives, the Gold IRA stands out as a compelling and often overlooked strategy, particularly when compared to the perceived safety of bonds and the market-linked nature of mutual funds and ETFs. This comprehensive audiobook will delve deep into the world of retirement investing, dissecting the nuances of Gold IRAs, bonds, mutual funds, and ETFs. We will meticulously analyze each asset class, examining their historical performance, inherent risks, and suitability for retirement portfolios. While acknowledging the role of diversification and a balanced approach, this exploration will specifically champion the strategic advantages of incorporating a Gold IRA into your retirement strategy, arguing persuasively for its unique ability to safeguard wealth, hedge against economic uncertainty, and potentially enhance long-term returns in an increasingly volatile global landscape. The shifting sands of retirement, why traditional approaches may fall short. Before diving into the specifics of each investment vehicle, it's crucial to acknowledge the evolving landscape of retirement planning. The assumptions and investment strategies that held sway in previous generations are facing unprecedented challenges in the 21st century. We are navigating an era characterized by persistent inflation. The specter of inflation, once considered a relic of the past, has returned with a vengeance, eroding the purchasing power of savings and fixed-income investments. Low interest rates further exacerbate this issue, making it difficult for bonds to keep pace with rising costs. Market volatility. Global events, geopolitical tensions, and rapid technological shifts contribute to increased market volatility. Stock markets, while capable of generating substantial returns, are also prone to sharp corrections and prolonged bear markets, threatening retirement nest eggs built on equity-heavy portfolios. Economic uncertainty. From global pandemics to supply chain disruptions and looming recessionary pressures, the economic outlook remains clouded with uncertainty. Traditional assets, heavily reliant on the health of the broader economy, are vulnerable to these macroeconomic headwinds. Currency debasement. Years of expansionary monetary policy and government debt accumulation raise concerns about the long-term value of fiat currencies. As central banks around the world grapple with economic challenges, the potential for currency debasement becomes a tangible risk to consider. These factors collectively paint a picture where relying solely on traditional retirement assets may expose investors to significant risks. Bonds, while historically considered safe havens, are struggling to offer meaningful returns in the current low-interest rate environment and are particularly vulnerable to inflation. Mutual funds and ETFs, while offering diversification, remain inherently tied to the fluctuations of the stock and bond markets. Enter the Gold IRA, a timeless anchor in a turbulent world. In this environment of uncertainty and eroding purchasing power, the appeal of gold as a safe haven and store of value has resurfaced with renewed vigor. A Gold IRA, a self-directed individual retirement account that allows you to hold physical gold and other precious metals, offers a compelling alternative and a powerful diversification tool for retirement savers. Understanding the Gold IRA, physical security and retirement benefits. A Gold IRA is not an investment in gold mining stocks or gold ETFs. Though these can also hold gold, they are different. It's an IRA that holds physical gold bullion, coins, and bars that meet specific purity standards set by the IRS. Here's a breakdown of its key features. Physical gold ownership. The core advantage of a Gold IRA is that you own physical gold. This tangible asset is held in a secure, IRS-approved depository on your behalf. Unlike paper assets or digital investments, physical gold exists outside of the financial system, offering a layer of security against systemic risks. Retirement account benefits. A Gold IRA retains all the tax advantages of traditional and Roth IRAs. You can contribute pre-tax dollars to a traditional Gold IRA, allowing your gold to grow tax-deferred, or contribute after-tax dollars to a Roth Gold IRA, enjoying tax-free withdrawals in retirement. Diversification beyond paper assets. Gold's historical performance demonstrates a low correlation, and sometimes even an inverse correlation, with traditional assets like stocks and bonds. This means that when stock markets decline or bond yields falter, gold often holds its value or even appreciates, providing crucial portfolio diversification and potentially mitigating overall risk. Inflation hedge. Historically, gold has been a reliable hedge against inflation. As the purchasing power of fiat currencies erodes due to inflation, the price of gold tends to rise, preserving wealth and maintaining real value over time. Safe haven asset. During times of economic turmoil, geopolitical instability, or market crises, investors flock to gold as a safe haven. Its inherent scarcity, intrinsic value, and lack of reliance on any single government or institution make it a trusted store of value during uncertain periods. Long-term value preservation. Gold's long and storied history as a store of value stretches back millennia. It has consistently maintained its purchasing power across generations, acting as a bulwark against inflation and currency devaluation over very long time horizons. Gold IRA versus bonds. The illusion of safety in a low-yield world. Bonds have long been considered the cornerstone of a conservative retirement portfolio, offering stability and income. However, in today's economic climate, the traditional allure of bonds is fading, and the advantages of a Gold IRA become increasingly apparent. Yield crisis. Interest rates remain historically low, diminishing the yield offered by bonds, particularly government bonds. After accounting for inflation, the real return on many bonds is often negligible, or even negative, meaning bonds are losing purchasing power over time. Gold, while not yielding dividends or interest, is focused on capital appreciation and preservation of wealth, which becomes paramount when yields on fixed income are paltry. Inflation vulnerability. Bonds are highly susceptible to inflation. As inflation rises, the real value of fixed income payments erodes, and bond prices can decline as interest rates rise to combat inflation. Gold, conversely, tends to perform exceptionally well during inflationary periods, making it a far more effective inflation hedge than bonds. Interest rate risk. Bond prices and interest rates have an inverse relationship. As interest rates rise, as central banks are increasingly forced to do to combat inflation, bond prices fall, leading to potential capital losses. Gold is generally less sensitive to interest rate fluctuations, offering a refuge when rising rates negatively impact bond portfolios. Credit risk. Corporate bonds. While government bonds are considered low risk, corporate bonds carry credit risk. The risk that the issuer may default on its debt obligations. Economic downturns can increase default rates, impacting the value of corporate bond holdings. Gold, being a tangible asset with no counterparty risk, eliminates this concern. Limited growth potential. Bonds are primarily designed for income and capital preservation, not significant growth. Their potential returns are often capped based on prevailing interest rates. Gold, while not guaranteed to appreciate, has historically demonstrated periods of substantial price increases, particularly during economic crises and inflationary periods, offering a potential for growth that bonds simply cannot match. In summary, Gold IRA versus bonds for retirement. While bonds may still play a role in a diversified portfolio, their effectiveness as a primary retirement asset is increasingly questionable in the current environment. A Gold IRA emerges as a superior alternative for the safety-conscious investor seeking to protect their retirement savings from inflation, low yields, and interest rate risk. Gold offers tangible security, historically proven inflation protection, and the potential for capital appreciation, making it a far more robust anchor for long-term retirement wealth preservation than bonds in today's economic climate. Gold IRA versus mutual funds and ETFs, beyond market volatility and fees. Mutual funds and ETFs are popular investment vehicles due to their diversification and accessibility. They offer exposure to a basket of stocks, bonds, or other assets within a single investment. However, for retirement planning, particularly in turbulent times, a Gold IRA presents compelling advantages over these market-linked instruments. Market risk and correlation. Mutual funds and ETFs are inherently tied to the performance of the stock and bond markets. They are susceptible to market corrections, bear markets, and systemic risks that can significantly erode portfolio value. Even diversified funds cannot fully shield investors from broad market downturns. Gold, with its low correlation to traditional markets, offers a valuable counterpoint to market-driven portfolios. When stock and bond markets decline, gold can act as a ballast, potentially mitigating losses and improving overall portfolio stability. Fees and expenses. Mutual funds and ETFs come with various fees, including management fees, expense ratios, and transaction costs. These fees, while seemingly small individually, can compound over time and significantly reduce long-term returns. While Gold IRAs also involve fees for custodianship and storage, strategically choosing a reputable custodian and understanding the fee structure can help manage these costs effectively. Furthermore, the potential benefits of gold's safe haven status and inflation hedging capabilities can often outweigh these fees, especially during periods of economic uncertainty and market volatility. Lack of tangible ownership. Investing in mutual funds and ETFs represents indirect ownership of underlying assets. You don't directly own any stocks, bonds, or commodities. In a Gold IRA, you directly own physical gold bullion or coins held securely in your name. This tangible ownership provides a sense of security and control that is absent with paper-based mutual funds and ETFs. Counterparty risk, ETFs. Some ETFs, particularly those using synthetic replication, may carry counterparty risk, the risk that a financial institution involved in the ETF structure may fail to meet its obligations. Gold, as a physical asset, has no counterparty risk. Its value is intrinsic and not reliant on the solvency of any intermediary. Limited inflation protection, equity-based funds. While some may argue that stocks can also act as an inflation hedge, their effectiveness during periods of stagflation, high inflation, and slow economic growth is questionable. During stagflation, corporate profits can be squeezed and stock market performance may suffer. Gold historically has thrived during stagflationary environments, outperforming equities and often preserving wealth effectively. Volatility concerns, specialized ETFs, sector-specific ETFs, leveraged ETFs, or volatile market ETFs can expose investors to amplified market swings. Retirement portfolios, particularly as individuals approach retirement age, should prioritize stability and capital preservation. Gold, while its price can fluctuate, generally exhibits lower volatility than many sectors of the equity market, particularly when considered as a long-term diversification tool. In summary, Gold IRA versus mutual funds and ETFs for retirement. Mutual funds and ETFs serve a purpose in portfolio construction, offering diversification across different market sectors and asset classes. However, relying solely on market-linked instruments like mutual funds and ETFs for retirement exposes investors to significant market risk, fee erosion, and a lack of tangible security. A Gold IRA, as a diversifier and safe haven asset, provides a crucial counterbalance to market volatility, offers tangible ownership, and has a proven track record of preserving wealth during economic uncertainty. A strategic allocation to a Gold IRA can enhance portfolio stability, mitigate risk, and potentially improve long-term retirement outcomes, particularly in an environment where market volatility is expected to persist. Building a resilient retirement portfolio, the strategic role of the Gold IRA. The optimal retirement portfolio is not about choosing one asset class to the exclusion of others. It's about constructing a well-diversified portfolio that incorporates various asset classes, each playing a specific role in achieving long-term financial security. In this context, the Gold IRA is not presented as a replacement for all other investments, but as a vital and strategic complement to a balanced portfolio. Key roles of a Gold IRA in a retirement portfolio. Diversification. Anchor acts as a crucial diversifier, reducing overall portfolio risk by providing exposure to an asset class with low or negative correlation to traditional markets. Inflation safeguard provides a reliable hedge against inflation, preserving purchasing power and real wealth over time. Safe haven bastion offers a safe haven during economic downturns, market crises, and geopolitical instability, safeguarding capital when other assets may decline. Long-term value store acts as a long-term store of value, protecting against currency devaluation and maintaining wealth across generations. Portfolio stability enhancer improves overall portfolio stability by mitigating volatility and potentially dampening the impact of market downturns. Practical considerations for investing in a Gold IRA. Custodian selection. Choose a reputable and IRS-approved Gold IRA custodian. Research different custodians, compare their fees, storage options, and customer service. Gold storage. Your gold must be stored in an IRS-approved depository. Ensure the depository is secure, insured, and offers segregated storage, your gold held separately from others. Eligible metals. The IRS has specific requirements for the type and purity of gold, silver, platinum, and palladium eligible for inclusion in a Gold IRA. Focus on bullion bars and coins meeting these standards. Fees and costs. Understand the fees associated with a Gold IRA, including custodian fees, storage fees, and transaction fees. Compare fees across different custodians to find a cost-effective option. Long-term perspective. Gold is generally considered a long-term investment. Approach your Gold IRA with a long-term perspective, focusing on wealth preservation and diversification rather than short-term gains. Conclusion. Fortify your retirement future with the enduring power of gold. In a world characterized by economic uncertainty, rising inflation, and market volatility, relying solely on traditional retirement strategies may be insufficient to secure a comfortable and worry-free retirement. While bonds, mutual funds, and ETFs have their place, the strategic inclusion of a Gold IRA offers a powerful advantage to discerning investors. Gold provides a timeless and proven hedge against the very forces that threaten traditional retirement portfolios. It offers tangible security, inflation protection, diversification beyond paper assets, and a safe haven during turbulent times. By strategically allocating a portion of your retirement savings to a Gold IRA, you can fortify your financial future, build a more resilient portfolio, and navigate the complexities of the modern economic landscape with greater confidence and peace of mind. Investing in a Gold IRA is not about abandoning traditional assets altogether. It's about strategically diversifying and strengthening your retirement strategy by incorporating the enduring power of gold, a timeless asset that has stood the test of time and continues to shine as a beacon of stability in an increasingly uncertain world. Also, I would recommend that you get a completely free Gold IRA guide that is written by the best and most trusted Gold IRA company that I have found after over 20 years as an expert, independent gold researcher. This free Gold IRA guide will explain everything you need to know and will also answer any questions you may have about Gold IRAs. This is the best guide I have seen in my lifetime as an expert independent gold researcher with more than 20 years of experience, and this is the best guide available anywhere in my opinion. Also, when you get this free Gold IRA guide, you will get free access to the top Gold IRA experts who will provide you with personalized support and help over the phone, and they will answer any questions you may have. To get this top free Gold IRA guide, simply go to the link that is in the episode show notes or go to the link that is in the episode description. So again, to get this top free Gold IRA guide, simply go to the link that is in the episode show notes or go to the link that is in the episode description. This free guide is really worth getting. Simply go to the link that is in the episode show notes or go to the link that is in the episode description. Also, this audiobook is not financial, investment, or tax advice. For financial, investment, or tax advice, consult a financial, investment, or tax advisor and take full responsibility for any decision you make. This is the end of this audiobook. I hope you enjoyed this and found it valuable. I would really appreciate it if you could please share this with everyone you know. All the best to you.